And I just shut off my video, but I'm muted still, so I'll let you know before I start this session. Okay, I'm gonna go ahead and get it started, and just give it like 5 seconds, and then you guys could start going with it. Okay. All right, here we go.
All right, good afternoon, everyone. Thanks for coming back and joining us today. My name is Marlena Scott. Again, if you tuned into the first webinar with us, I am an affordable lending manager here at Freddie Mac. I manage the real estate professional team here. We have a great webinar lined up for you, and I'm going to be joined today by a special guest. We have Mr. Jim Peranto, who is our training manager for customer education services here at Freddie Mac. He's actually going to touch on a few of the product solutions that I mentioned during that first webinar series. If you weren't able to attend it, I know that it's been recorded and it's available on YouTube, so make sure you check that out. But today is really about talking, about the affordable product solutions that are available to better help your clients and help you serve the community. So I'm going to go ahead and turn it over to my colleague, Jim Peranto.
Thank you so much, Marlena. Let's go ahead and begin. And as Marlena said, we're going to be talking about Home Possible and HomeOne today. These are both fantastic offerings for your clients. You're going to look today, we're going to be going through some of the flexibilities and the options that are going to really meet your clients' needs. So a few things we're going to talk about today is start off with Home Possible and really talk about how this is a good financing option for a qualified low to moderate income first-time home buyers. And then we're going to move into HomeOne, which is a great low down payment option for your clients. So we are then after this going to do some real life scenarios that you guys are going to come across where when you're working with your clients, it's going to help you guys put them in the best offering for them specifically. So let's go ahead and begin. The first thing I want to do is take a moment and really just talk about your clients. And as I go through this stuff, let me know if this resonates with you and the conversations that you've had with them. So some of our research has found that 33% of first-time home buyers, borrowers are first-time home buyers. And if you look on the screen here, first-time home buyer percentage has remained the same since the previous year. And that is 52% of buyers are 30 to 39 years old, and 88% of buyers 29 years and younger were first-time home buyers. So let me know if that resonates with you guys. You guys can communicate with me through the chat room. As housing demand moves from rent to owned, first-time home buyers will continue to maintain an outsized role in the housing market. Also, what we have found is that the largest share of home buyers are millennials at 38%. And Gen-wise, 40% of these buyers are first-time home buyers. On the next page, we're going to go over what we found when we were actually talking to some potential buyers in the marketplace. So we did a survey of individuals looking to purchase a home in the next 3 years. 1/3 thought they had to put 20% down. Again, take a moment, let me know in the chat room, does that resonate with the conversations you guys are having with your clients? Additionally, they said they couldn't buy a home in the next 3 years if a 20% down payment was required. That was 70% of the people we talked to. Lastly, 30% said, well, if I need to put 20% down, I'm never going to be able to afford a home. So these statistics, these statistics that we found working with clients are very eye-opening. We want to take a moment and kind of preview for you guys a video about Home Possible and some of the clients it's helped, and it's really helped them get into homes that they otherwise wouldn't be able to afford. So what I'm going to do is take a moment. I'm going to put on a video here, and I will check back in with you guys after the video is completed.
Hi, I'm Christine Dolan, and I'm 24 years old, and I teach second grade.
My name is Willie Dolan. I am 25 years old, and I am a tech entrepreneur. We both grew up in Oregon, and it was really important to us to find a home that was close to where our families were so that we could continue to build a community.
When we first got married, living in an apartment, and we just had so many problems with our apartments. We've had really bad luck. We knew that we wanted to get into a house as soon as we could, but it took us a while to get there just because of our finances and just our desire to find the right house.
The Dolans came to me because they were looking to buy their first house, and they had a very specific payment that they felt comfortable with. We ended up using the Home Possible because it's a 3% down, gave them a good rate, and gave them the payment they felt good with, so I pre-approved them, and then they went out and found a home.
It was so scary because no one in our life has a house really that is our age, and so we knew we were taking a huge leap of faith because we didn't hear those positive experiences from our peers.
I love to sing, and when we lived in an apartment, I was always thinking about who's upstairs listening. But the first time I got to really belt out a note in my home, I could tell that this home was for me.
My name is Karina Segovia. I'm a real estate agent and I am a proud homeowner. I moved from Mexico. I was born and raised there. My first language is Spanish. And I moved here when I was 15. I came here to work. Before I moved here, I rented a studio in the back of my sister's house. And it was very small. I went to see Sergio, which is the lender. I said, you know what, I'm interested in buying a house, but I have no credit. He said, why don't we check your credit right now? And the credit came back at 727. I was full of joy that my credit was so high.
The Home Possible is a great program that gives clients like Karina the opportunity to purchase a home with favorable terms and other products. To put someone like Karina in a home is a very rewarding experience. And I've helped some of her clients obtain homes, and for me, it's an honor to help her get her own home.
My name is Salome Williams. I work for Lowe's Home Improvement. I'm a honest, committed type of person, and I like things in order. I was born and raised in New Orleans. I'm originally from here. I've never left. Even after the storm, I stayed. I had a house before this. I went through foreclosure with that house. But at the time that I had the house before this, I just wasn't ready. When you take and you buy a home, you have to be prepared and you have to be ready.
So when Stella came to me, her situation, the property that she was purchasing, the location, everything about her made sense. So this product really made sense. So I gave her options. I gave her a comparison of what product we could make available to her. And of course, the Home Possible was the best option out there.
When you're talking about a home, you're talking about something that's originally something that's yours, something you can, when you walk through that door, it's like everything to you. The first morning, believe it or not, I took a cup of coffee and I sat on my carport and I just looked around and I just started crying because I'm like, wow, I did this. And it was a great feeling. I'm like, unreal. It was unreal.
All right, guys, take a moment and let me know. I see a few things, and thank you. Someone dropped a link into the chat room for us where if you guys want to be able to, my video wasn't the best today, so I do apologize, but you have that link where you can watch that video. And I really love that because it shows what we're doing here. It's all about helping the clients and putting people into homes. Now, what we're going to be moving into here is Home Possible, which is something that, again, what you saw those clients or the mortgage companies providing their clients in that video was Home Possible, and really helped those people get into homes. And so let me turn my camera back on here. Bear with me.
And while you're doing that, Jim, if I can just chime in really quickly. So back to just what we were discussing of as far as the 20% down being, 1/3 of people are able to actually do that. The purpose of us talking about these product solutions is really we have to dispel that myth of 20% down, because we really are keeping so many, potential home buyers or homeowners from the table. So really thinking about how you're having those conversations with your client. There are other solutions and options, and even the example that was given in the video about the one woman who didn't know, what her credit was, but once she did, she realized there are, affordable options for her. So I just wanted to touch on that for a second.
No, thank you. I do appreciate that. So what we're going to do is we're going to move into some of the characteristics of a Home Possible loan. And starting off here, you're going to see on your screen that Home Possible allows your clients to qualify for loans up to 97% loan to value and 105% total loan to value with the qualifying affordable seconds. And we'll talk about those affordable seconds coming up here a little bit. That's very competitive compared to other things in the marketplace. A 3% down option is going to help a lot of those borrowers get into homes quicker that they otherwise wouldn't be able to qualify for. And part of what you guys can do is just like what Marlena said here is it's all about educating your clients about that 3% down option available to them. In addition, to other property types, they can qualify with a 2 to 4 unit properties and a super conforming mortgages, and we have some different requirements for those. One of the biggest takeaways or benefits for Home Possible is the mortgage insurance. Here we've got a comparison on the screen that I want to go over with you guys. On the left-hand side, we've got Home Possible, and on the right-hand side, we've got FHA. The big thing is with an FHA loan, and a lot of times I have to tell you guys, people kind of in the marketplace are either going FHA or Home Possible. But you're going to see with FHA that MI is going to stay there for the life of the loan. You have to pay that upfront MI in monthly premiums. That MI is never going to go away, right? So that upfront MIP, mortgage insurance premium, is going to be rolled into the principal, and then they're going to have to pay the amortization on that for the life of the loan. Home Possible is different. Home Possible, you only need mortgage insurance when you're above 80%, and when it's below 80%, that MI can be canceled just like any other type of conventional loan. So when you're working with your clients, let them know the differences between these two. In the long run, often Home Possible is going to be a better option for your customers. Let me just take a moment and tell you guys a personal experience I had where I was working with, it was at a place I was presenting at, and there was someone from FHA and VA, and we were there as well. And one of the things that really resonated with me was the gentleman from FHA said that they didn't want to be your first choice or your second choice. Don't get me wrong, FHAs serve a great market, but what we find is a lot of people get in the habit of finding one type of offering and pushing all their clients into that offering because they're familiar with it. I want you guys to be familiar with multiple options, especially Home Possible, and make sure you're considering Home Possible for all your customers because often you're going to find it's a better option for a lot of customers. The next thing we're going to talk about is that Home Possible has flexible sources of funds. So it allows your clients to utilize flexible sources of funds such as cash on hand, affordable seconds, and sweat equity. And we'll talk about that coming up in just a little bit. But for example, you can use gifts of equity, gift funds. We've got things such as wedding gifts. Often people use wedding gifts. And only 3% has to come from your client's personal funds if it's a 2 to 4 unit property. So if we're talking about a single family residence or a condo, another type of property, all of the money can be gift. So the entire 3% can be from a gift from a relative or acceptable source of funds. So again, talk about getting people in the homes earlier. There's a lot of flexibility and options to help get your clients that money and get them in the home right away. Sweat equity, we'll talk about this in a little bit. This is credit for labor performed on the mortgage premises and or materials furnished by the mortgage premises by your client. And we talked about affordable seconds previously, which allows you guys to qualify your clients with up to 105 TLTV ratios. As far as income ratios, Home Possible requires that your clients meet certain income requirements. To be eligible, your clients have to qualify for income that cannot exceed the area median income limits for that area. So what we request is that the AMI limits have to be at 80% or lower for AMI limits. So let me check in with you guys using that chat room. How many of you guys are currently familiar with the AMI limits or where to find them? So take a moment, if you guys haven't opened that chat room yet, make sure you're sending your messages to at least the panelists so at least we can see them, if not everybody. How many of you guys know what the AMI limits and know where to find them?
So it looks like we're getting a lot of no's or do not know. One said the NAR website or state house website.
All right, perfect. So we are going to show you guys in the materials that's going to go out. I've got a link to it here. And Freddie Mac has a Home Possible income and eligibility tool. I'm going to preview it for you guys in just a couple of slides here, so we're not going to go over it again. But I'm going to show you guys how easy it is to use. I mean, you type in the address, it's going to take you right there, and it's going to spell out exactly what that AMI limit is, area median income limit is, and what your client needs to be at or below in order to qualify. So for you guys, it's going to take 30 seconds maybe in order to look up, and you can look it up for whatever property your client's looking to purchase. So we'll circle back to that in a little bit. I do have a question for you guys. And so we can utilize that chat room and let me know yes, no, or not sure. So let's talk about it. This is a real life situation that I expect you guys to come across with your clients. Your client is going to convert their current home into a rental property. And then they're going to go out and purchase a new property using Home Possible. That's going to be their owner occupied property. Is that acceptable? So your client says, my current home is going to be a rental property. I'm not going to sell it. I'm going to go buy a new home with Home Possible. And I'm going to live in the new home.
So we're getting a couple yeses, some no's, more yeses, and a couple not sures.
Oh, and someone said they had an issue with the video. I'll see if I can drop that link in. Unless Monica, you could try dropping that link in again, that'd be great. All right, the answer here is yes, and it is available. I want you guys to let you guys know this is something that we actually get questions from frequently, and this is something that's going to happen. I don't want you guys to think just because they own a home that they don't qualify for a Home Possible offering. We do allow them to own multiple homes. So your client can have ownership interest in up to 2 residential properties. So in the scenario we just went through, they could keep the property they own, turn it into rental property, and still purchase a new property using the Home Possible offering. We do allow non-occupying co-borrowers on a 1-unit property with Home Possible, as long as at least one borrower is going to occupy the property as a primary residence. So if your client's looking for additional income or other reasons, they can qualify with the Home Possible. Let me ask you guys, and I kind of gave away one here, by using that chat room, what are some of the reasons your client might want to add a non-occupying borrower? Let me know in that chat room. So working with your client, why would they might want to add a non-occupying borrower? Yep, they don't make enough to qualify themselves. Mm-hmm. So maybe they need that additional income. And for example, maybe mom and dad need to jump on the loan. Yeah, thanks, credit. Maybe they need to improve the credit profile. Yep, using a parent to qualify. I'm going to include that as our third one, which could be additional funds. So maybe mom and dad want to give them funds, but they don't want to gift it. They want to be on the mortgage itself. They can come on as a non-occupying co-borrower. So again, we talked in the beginning about the flexible options with this. There's a lot of flexibilities, and I want to make sure you guys are aware of them so that anyone that does qualify for Home Possible and all these benefits is going to get them. I mentioned affordable seconds a few times here. These are fantastic. And so let me ask you guys, just to check in with you before I get into this, how many of you guys are familiar with what an affordable second is? Let me know in the chat room. So how many of you guys are familiar with an affordable second?
So it looks like we don't really know. In one I am so far.
Okay, perfect. Well, I'm glad to be here because let me give you guys some of the benefits of affordable second. So when qualifying with an affordable second, your clients are eligible to qualify up to 105% total loan to value. An affordable second, we've got a slide here for you guys, and this is based on Freddie Mac's website. But affordable seconds offer flexible sources of funds for your customers. Sometimes they're called seconds, soft seconds. There's a couple different names from soft seconds, community seconds, forgivable loans. What you're going to find with these is maybe the borrower is going to live in the property for 3 years, 5 years, 7 years, and they don't have a payment until after that point. Or maybe if they live in the property for so many years, the loan is forgivable after so many years. So that's what we're talking about with affordable seconds. Again, these are really beneficial to your clients, and they're going to help you get your clients into homes quicker. So we do have some requirements here for affordable seconds. It has to be done by an established, ongoing, documented secondary financing or financial assistance programs. It cannot be provided by the property seller or other interested party to the transaction, or some other type of subsidized secondary financing or other financial assistance. And lastly, some of the confusion that I've seen from customers in the past is what's the difference between a gift and grant and affordable second? Affordable seconds are going to be evidenced in the land records. And so that's really the big difference between you're talking about a gift or grant and affordable second.
And then Jim, just to clarify, this cannot be a HELOC, correct?
Correct. Yep. Thanks, Marlene. It cannot be a HELOC. One of the other things that is available through Home Possible is the homeownership education and counseling. So homeownership education and counseling is required when all occupying borrowers are first-time homebuyers. When all of them are first-time homebuyers, at least one occupying borrower must take the homeownership education and counseling. I want to make sure we're all clear what we're talking about here. So in the chat room, can anyone let me know, what do we consider a first-time home buyer? So I'm saying first-time home buyer. Who are we referring to? There we go. Yep, haven't owned any property in 3 years. Yep, have not purchased a home in 3 years. You guys are correct. I'm going to tag on to that just a little bit. It's had no ownership in residential property in the last 3 years. So that's really who we're talking about with a first-time home buyer. So again, this is only when all of the borrowers on the loan are going to be first-time home buyers. One of them has to participate in the homeownership education and counseling. So when it's a 2 to 4 unit purchase transaction, at least one borrower must participate in the landlord education and counseling. So a few things to know about here, in case your clients are asking, it can't be offered by an interested party to the transaction, including the originating lender or seller. One of the questions we often get is, well, what about the MI company? MI companies are not considered an interested party to the transaction, so that they are eligible to offer the homeownership education and counseling. But my unbiased opinion, of course, as a Freddie Mac employee, is that the best for you guys is going to be our Credit Smart. So Freddie Mac offers a free service for your clients where they can take this homeownership education and counseling. It's free, it's online, it's interactive, and you're going to see that it's we've got a lot of really good feedback based on this Credit Smart. One of the things I want to point out to you guys is that it is available in multiple languages. So it's available in English and Spanish. And I've got a link here on the page, let me point out to you guys, with the material that you can get afterwards, that you can click on that and access the Credit Smart. Now, here on the next page, again, this Credit Smart Homebuyer U is going to meet the requirements for Home Possible and for HomeOne, which we're going to talk about in just a little bit here. It has 6 modules, and each are going to learn focus on one of the learning principles, such as credit, money management, how to sustain and preserve your home purchase investment. It's very interactive. There's a lot of videos, as you can see on the screen here. And let me, well, I don't have a pop-up here, but when you give this to your clients, make sure they are choosing on the Credit Smart Homebuyer U with certificate. There's 2 different options there. There's one without certificate, that's 12 modules, and one with certificate, that's only 6 modules. Make sure that they're choosing the correct one. All right, guys, let's move into HomeOne here. So I want to take a moment and ask you guys, is there any outstanding questions you have about Home Possible? Take about 15 seconds, just type them in the chat room. Let me know if there's anything that you guys are looking to learn more about Home Possible.
Jim, I have one question. With condos, a complex would have to be FHA certified with an FHA loan. With Home Possible, what is required?
You follow our standard Freddie Mac condo guidelines. So if you look in chapter 5701, the same guidelines you would have for a condominium for any kind of regular conventional loan would apply to Home Possible. And thanks, Marlene, for that question. One of the things I really want to point out is I'm a former quality control underwriter of Freddie Mac, and I've been underwriting several different companies. The nice thing about Home Possible is it's so easy to underwrite. It's going to be easy for all the lenders. It's not going to slow it down. So for you guys specifically, if you have a client that is going with Home Possible, generally you're going to have quicker close times than FHA with the FHA appraisals, et cetera. There's almost no difference, just that AMI limit difference with the Home Possible. Yeah, and one of the questions that came in was the Credit Smart. You're going to see, and I'm going to back up here for you 1 second. The title will be Credit Smart Homebuyer U with certificate, and it'll show 6 modules. We have another one, also free. If your client wants to learn more, it's 12 modules, but it doesn't have the certificate. So if they need it, though, my takeaway for you guys is make sure they choose the one that says with certificate. Both are fantastic, but if you need the certificate, make sure you choose the correct one. All right, thanks, guys. We will circle back again. If you have any outstanding questions on Home Possible, we can circle back to them. Now we're going to move on to HomeOne. HomeOne and Home Possible get compared a lot because they are both low down payment option mortgages, but they do operate a little bit different here. And you're going to see on the screen, the biggest difference you're going to see between Home Possible and HomeOne is that they are, let me get my mouse going here. There's no geographic or income limitations. So with Home Possible, we had to be at 80% or less with that AMI limit. And I'm going to show you what that looks like in just a couple slides here. With HomeOne, we don't have that option. So if this is a borrower, let's say you got a client that just started out in their profession. Someone's young, they've started to make some money, they haven't had enough time to really make that savings in order to put enough money down, a large chunk down in the house. HomeOne is a great option for them because maybe their income exceeds the AMI limits, but they haven't had a chance to save up enough money to put 5, 10, 20% down. Well, HomeOne is a great offering for them. It is only for first-time homebuyers, and we talked about first-time homebuyers previously. Home Possible is great for first-time homebuyers, but they don't have to be a first-time homebuyer, right? That's a distinction too. HomeOne, they do have to have at least one borrower that's a first-time homebuyer. So as we see, drawing your attention back to the screen here, again, this is going to help you guys capture a big growing client segment of the market now today. It's more flexibility with maximum financing. It is really simple. And this is something I want to point out to you guys as well, because I know from your standpoint, it's the time to close for your clients that you're working with. HomeOne is very simple for the processors, underwriters, lenders, etc. So this is not something that's going to slow down your process. Here's some of the facts that we're going to go over here. With the HomeOne, it's going to be up to 97% loan to value. And in order for it to be a HomeOne mortgage, it has to be above 95%. So it's going to be a mortgage above the conventional 95%, up to 97% loan to value. You can take advantage of 105% total loan to value with the affordable seconds we talked about earlier. Or if it's a HELOC, you can go up to 97% HELOC total loan to value. As I just said on the previous page, at least one home buyer has to be a first-time home buyer. So not all of them, but at least one person on the loan has to be a first-time home buyer. You can also do this with a no cash out refinance as long as the mortgage being refinanced is owned by Freddie Mac. It has to be securitized or owned by Freddie Mac. It's a one unit property only, no manufactured homes. So another difference is with the Home Possible, we talked about how you can do a 2 to 4 or other types of properties. HomeOne is only going to be a one unit property. All borrowers must occupy the mortgage premise as a primary residence, so you can't have any non-occupying co-borrowers like we did talk about with Home Possible. This is all going to be fixed rate. The big takeaway is there's no income limits. So if you have a client that's over the AMI income limits for that location, they wouldn't qualify for Home Possible, but they could still qualify for HomeOne. We already talked about the homeownership education counseling. That's required when all borrowers are first-time home buyers. And this has to be run through our AUS loan product advisor. I'm going to take a moment. Again, if you guys have any questions about HomeOne, let me know in the chat room. Take about 15 seconds and type in those outstanding questions you guys have about HomeOne. And I'll give it just a few seconds here and see if anything pops up. Otherwise, we are going to start with our check-ins here. Perfect. So if you guys have any outstanding questions, we can circle back to them later as well. So this is what I really love about this training is really taking a moment and talking about some real life situations as you guys are dealing with clients. We've got a tale of two clients here, and we're going to walk through this perspective together to help you guys really choose the correct needs for your specific clients. Client number one is looking to upgrade. They currently own a home, but they're selling their current property. Client number two you have is the newlyweds who are currently renting. They've never had any ownership in residential property. So we're going to start with client number one. Based on what we've gone over today, what option do you guys think would work for client number one? So do you think it's A, Home Possible, B, HomeOne, or C, both?
So it looks like we're getting a couple A's and a couple B's.
I'm going to give it a second, see if we've got a deciding vote coming in. Oh, the deciding vote went C. We got a couple of bulls. Now we are in a three-way tie. This is as close as it gets, guys. All right, both is taken away. Actually, the answer here is A. And so here's the thought process I want you guys to have when you're talking to your clients. They currently own a home. So they are not going to meet that first-time home buyer requirement that all borrowers have to meet on HomeOne. So as you're talking to your client and you're trying to get to know them, you know at that point HomeOne's not going to qualify. So we would look at Home Possible. So let's go ahead and explore this. So we know that they're not qualifying for HomeOne, but let's take a closer look at our client one's situation. They have a combined income of $63,500. They're looking to purchase a property in the Houston area. And although they sold a property, they're still looking for some additional funds to help them purchase. Marlena, let me turn it over to you for a moment here. Do you want to talk about the tool itself?
Sure. So we spoke about this a little bit last time, but this income eligibility tool for Home Possible is really great for you to utilize in your business. So, Jim's going to walk through the example, but another way that you can utilize this is, you can actually put your property listings in here to, know firsthand, what the area median incomes are. In addition to that, there's a down payment assistance, which we'll touch on in a moment. But this is great to utilize in your first time, your client consultation that you have. If they're concerned about, having enough down payment available, you can actually see if they qualify right there and there for the Home Possible, which is again 3% conventional product. And there's one question in the chat very quickly, Jim. So why would you use HomeOne versus conventional loan? There are conventionals that you only need 3.5%. What would be the benefit? And so I can take that or you can take it, but the difference is for HomeOne, it's actually just 3%. So it is lower. And then again, there's the standard, there's no geographical or income limits. And I don't know if you want to add any more to that, Jim.
No, I'll just tag a little bit on to exactly what you said. So for us, and to give you guys a little bit too much more knowledge, our regular conventional loan goes up to 95%. So anytime we go over 95%, our system's automatically going to analyze your clients to see if they qualify all the way up to 97. So for us, it's an automatic thing that happens behind the scenes. So whatever loan amount they're looking for, if it goes above 95%, we're going to analyze it automatically for HomeOne if it's sent through our AUS. So that's the big difference. It gives them an extra 2% down. It gives them 2% less they have to put down compared to 95% loan to value. Let's just jump back into our client, and thank you, Marlene. That was well said about how you guys can use this tool really in that introduction with your clients. And so let's take a moment and just look at how to use the tool. As I said to you guys earlier, we're looking to be at 80% or less for the AMI, area median income, for where that property is located. Utilizing the tool, and the material is going to go out later, and so you guys will have a link to the tool. And Monica, thank you. She dropped the link in there for you guys right away, so you guys can start playing with it right after today's session. Here, I entered my address. I typed my address in here. It's going to say 80% area median income. It's going to let me know that's at 64,000. You are going to see, I'm going to back up 1 second for you guys. It's also going to show you the Home Possible income limit here to let you know what that limit is for that property. And it's going to give you the 100% and 50% just for information. As you are using this tool, I want to encourage you guys to type in the full address. If you type in the zip code, it's going to take you to the center of town. And some of the areas within that zip code might be different. So make sure you type in that full address when you're looking up your client's property. So right now, we are excited because client number one is going to qualify with our income-wise at or below that 80% AMI limit. So far we know they qualify for Home Possible. But as Marlena said, well, we can look at some additional funds here, some down payment assistance programs. So right here on the screen, you're going to see that we just highlighted. If you click on that, you can go there and it asks you to enter about 5 or 6 different things. You type that in right away, and it's going to pop up and let you know what down payment assistance programs are out there available for your specific client. So again, this is a great all-in-one needs initially to let them know if they're going to qualify for the property with Home Possible, and a great source to help them find additional funds. All right, we're excited. Client number one qualifies. So we were able to help get our clients the dream home by utilizing Home Possible and helping them to be able to have a conversation about down payment assistance options we had with them. So we were able to qualify client one. Now let's take a look at client two. So client two, based on what we've talked about so far, would they qualify for Home Possible, A, HomeOne, B, or both, C? Let me know in the chat room.
So we have B, C coming in. 1A, we have another couple C's.
looks like we're leaning towards C. I'll give it just one more second if people are finding that chat room. All right, I think those answers. The answer here is going to be both. They've never had ownership interest on any property, so they are first-time home buyers. And as I said earlier, they would qualify for both. A lot of first-time home buyers are going to benefit from Home Possible, but they don't have to be a first-time home buyer for Home Possible. That's what I want you guys to think about that. So because they're first-time home buyer, they will qualify for HomeOne, and they're going to qualify for Home Possible. But let's explore this a little bit more. So their combined income is $89,000. They're looking for a property located in Houston. They are first-time home buyers, and they want to put as little down as possible. So they want to do 3% down, and they're interested in additional financing. So let's explore both these options to see which one's going to qualify. So just like Marlena said, this is a great way to do this initially when you're having the conversation with the customer. Unfortunately, we go back to the area median income tool that we dropped into the chat room earlier. You're going to see that the AMI limit for this location is $64,000, as we talked about earlier. Unfortunately, client number 2 is not going to qualify for the AMI limits for Home Possible. So what does that mean? It means that we know that we're going to have to look at HomeOne, because they can still qualify for HomeOne, because if their income, it doesn't have any income limits. So if it's above that AMI limits, no worries, HomeOne is still an option. Now, do they have to complete a homeownership education counseling? The answer is yes. So as I said earlier, if you have all home buyers have to be first-time home buyers with HomeOne, and at least one of them has to complete the homeownership education and counseling. It's the exact same one that we talked about under Home Possible. So I'm not going to bring it up again and show you guys the link again, but the same thing applies where we want you guys to choose the Credit Smart Homebuyer U with certificate that has the 6 options. And there's a link to it right there. All right, guys, we were able to qualify client number 2. Yay! And we were able to do this and help get the clients in the dream home by utilizing HomeOne. They've got a better understanding of the responsibility of owning a home after they completed the homeownership education counseling through Freddie Mac's Credit Smart Homebuyer U course. All right, so hopefully just taking a moment and just reflecting on those 2 different options that we went through is really going to help you guys in your real life situations when you're working with clients, because I know that's what you guys do on a daily basis, is just that personal experience and just talking to them and making sure they're going to get the best option for them. Walking through hopefully client number 1 to client number 2 and kind of exploring the differences between Home Possible and HomeOne are really going to help you guys with your conversations. So at this point, I want to bring Marlena back on, and she's going to talk to you guys about some of our additional materials. Marlena?
Great. Thank you so much, Jim, for all of that information. And of course, if you have any more questions about the 2 products we covered today, make sure you get those into the chat. And we will discuss those after I go through these resources. And then as a reminder, you will also get a copy of this presentation in a PDF format, so you can actually have access to all of the links. So we know that you all work with a lot of first-time homebuyers, and you work with homebuyers on a regular basis. You are the trusted advisor. So we have some resources that are available, at single family or at our single family Freddie Mac site regarding affordable lending, step-by-step guides. So this is actually a great resource for you to help you reach more clients and build your business out. If you go to the next slide, we'll have another resource available, which is the down payment assistance resource. We touched on this again during our first webinar. I keep referencing, because if you missed it, go back and watch it. But this is really something you can use in your day-to-day. I mean, what better way to help your clients save money than to, take a look at the down payment resource website. You can actually input all of your different listings and see what down payment assistance is available. This is a great tool also when we go back to doing more open houses. You actually know your listing that you're showing that day, if there's down payment assistance available that may, match with the Home Possible product that we have, or even our, HomeOne. If you go to the next slide, We have My Home, which is also a great interactive source. Again, this is consumer facing, so you don't have to worry about anyone, accessing your clients or engaging with your clients. This is strictly for knowledge base. This is something that you can, use as a follow-up or a touch point in your business. If someone is, interested in potentially buying a home, but they don't really know where to start, send them to My Home by Freddie Mac. It is also free for them to access. And you can then follow up with them and use this, as I mentioned earlier, a touch point to keep that conversation going and answer any questions that they might have. Also great for identifying whether renting or owning is really a good solution for them. In addition to that, we've also added some information regarding anyone who's having any sort of hardship to have access to some solutions for them as well. So if you go to the next slide. We have a Freddie Mac Borrow Help Center national network. Right now, some people are struggling due to the impact of COVID-19. Some people are, just struggling, even before this. So we actually have 14 HUD-approved housing counseling agents that can also help, prospective home buyers, help those who maybe need a little additional credit information regarding building their credit, developing some, different patterns for savings, help them learn about, of course, down payment assistance. And we in particular work with lenders that serve the minority and underserved communities as well. But this is a great resource, again, if you are just looking to have some of those clients out there that need a little bit of extra help, those networks, those help centers are available to you. And then lastly, we have our Real Estate Professional Resource Center. If you are not yet registered, make sure that you are. If you haven't subscribed, we will send out information regarding, some of the ebooks that we're working on, some of the latest market data trends. If we're having any big events, we will send you the information so you can register to attend those events that will help you, drive business, help you continue to be that trusted advisor. So definitely want to subscribe to that. We have some upcoming events that are coming in through the summer. Definitely want to stay tuned for that as well. And so I think that brings us to the end, and I will check the chat again to see if there's any additional questions. But I want to thank you all for really for tuning in today. We do have one more session that is coming up that's really going to touch on how to help out with that aged housing stock that we have out there. And that will actually be Monica, could you put in the chat when the next date is, if you don't mind? But this again is going to be recorded. You will have access to this on YouTube, as Michael just mentioned in the chat as well. And I have one more question, Jim. So regarding other loan costs, how would these products be more competitive?
So and I'll turn my video back on here. So first of all, I want to direct you guys to our Exhibit 19 for our costs, but just generally, Home Possible is going to be a fantastic offering. It's got much lower MI insurance at the highest LTVs. So for example, if you are at, we were talking about 3% down options. If you're at a 95 to 97% loan to value, it's going to have 25% MI requirements. HomeOne is going to be 35%. So I encourage you guys to first look at Home Possible with your clients. That generally, if they qualify, is going to be a better offer for them. And then I would say if you didn't qualify for Home Possible, then look at HomeOne as another option in order to get them in the home with only putting 3% down. Marlene, is there anything you want to add on to that?
No, you covered it. Thank you very much. So this has been a great, great information. Hopefully that answered all of your questions. If you do have any other additional questions, of course, you can forward those on to Michael, and he can send those over to us where we can follow up. But yes, join us next Thursday, April 22nd, for information about our choice renovation and our Green Choice product. Thank you again, and hope you guys have a great day. Thank you, Jim.
Thanks so much. Thanks, everybody.